Welcome to XM.com for this Forex Preview video. I'm Christina Marujos. With me today is Senior Investment Analyst Mario Sechkiriakos. We'll be having a look at U.S. data coming up and the outlook for the dollar. The dollar has been unable to capitalize on strong data or even good news lately, Marios. This, of course, has left some investors scratching their heads, but it also turns their attention to this week as we have Fed speakers and a barrage of data coming up. The highlight is probably going to be the core PCE price index out on Friday, which is the Fed's preferred inflation measure. What are we likely to see in the numbers and how could the dollar perform?
Hello, Christina. Well, we're going to get a lot of data. So the core PC price index is the most important one, but we'll also get data on consumption, durable goods, market PMIs for February. So it's going to be quite interesting. Now, most of these indicators are expected to show some improvement. But here's a catch. As you already outlined, we've gotten a lot of strong US data lately, but the dollar has hardly reacted. The pattern has been economic data surprise to the upside, but the dollar barely rises in the aftermath, or sometimes it actually fell afterwards. And this has been the case with the latest jobs report, the latest inflation report, last week's retail sales. All of those exceeded the forecasts in the markets, but the dollar could not rally at all. So the question going into this round of data is, are we going to see more of the same? Are we going to get another round of solid data, but the dollar still cannot capitalize? And if that is the case, it would be a very bad sign for the overall trend. It would suggest that the rally that we've seen in the dollar over the last year and 2 months, it might be running out of steam.
Let's have a look at the bigger picture, though, with geopolitics now taking center stage over central bank policies. What is the broader outlook for the greenback moving forward?
Well, that's where it gets complicated. So here's what has been happening lately. Since the beginning of the year, the stars have really aligned for the dollar. So we had geopolitical tensions, fears around armed conflict in Ukraine. That's good for the dollar because it's the world's reserve currency. We've had volatility in stock markets, also good for the dollar because it's considered a safe haven. And we've seen traders bet very aggressively on Fed rate increases. We started the year with the markets pricing in 2 or 3 rate increases by the Fed for this year, and now we are up to 6 rate increases being priced in. And yet, the dollar is flat for the year. Both euro dollar and the dollar index are essentially flat since the beginning of the year over these last 2 months. Now that to me is quite worrisome because if the dollar could not truly rally when everything was going in its favor, that's a bad sign for what might lie ahead. Of course, we can't analyze the dollar in a vacuum. A lot of this underperformance comes down to the euro, and the euro of course came back to life lately after the European Central Bank also said that it might raise interest rates. But still, overall, I don't think the dollar's future seems very attractive here. There are a couple of elements for this. The first one is I think the markets have already gone a little too far with pricing in Fed rate increases. We're pricing in, as I mentioned, 6 rate increases for the year. Now, when we see the first signs that US inflation has peaked, I think that some of those bets could be dialed back. And in fact, we might see inflation peaking over the next few months for a variety of reasons. We've got government spending fading, we've got supply chains finally correcting, and we have politics arguing the same point. The Democrats are probably going to lose Congress later this year. That means the days of extravagant government spending are over. That means slower economic growth, perhaps, especially when combined with the Fed raising interest rates. So all in all, I think that we're approaching the end of the dollar rally. Now, what could prove me wrong? Perhaps inflation remains persistently high, and that would force the Fed to tighten even more aggressively. But even if that happens, that could backfire as well, because if you raise interest rates too aggressively, that raises the risk of a recession, and that is also what the bond market has been signaling lately. Either way, it's just difficult for me to see a ton of upside for the dollar here, with the Fed already priced so aggressively.
Marios, thank you for joining me today. Thank you for watching this Forex Preview here at XM.com.